Good afternoon, this is Professor Milligan. Welcome to another Wall Street Wednesday. Today is July 21st, 2021. This is episode number 56. While I wait for people to join, welcome. Let me put my disclaimer out there once again. You guys know I always have my disclaimer. So these are Professor Milligan, my thoughts and opinions on investment ideas. If you decide to even consider some of these ideas, make sure that you speak to your financial advisor before doing anything. Again, that's my disclaimer. So I'll tell you what I'm doing, but make sure that you speak with your advisor before jumping into these waters. Again, that's my disclaimer. So welcome. We're off to, what's up, twin? We're off to another interesting week. It's been really interesting. What's up, twin? Another interesting week. So let me get to it with a couple things. One is right now, what is it? I wrote this down. 1 second. Of course I wrote it down, now I can't find it. What's it called? Bear with me a second. The B Word Conference with special guest speakers today of Elon Musk, Cathie Woods, and Dorsey. Elon Musk, you guys know, is Tesla. Dorsey is Twitter, and Cathie Woods, as you guys know, is the ETF fund. All of them are big major players in the ETF market. Excuse me, not the ETF market, the cryptocurrency market. So just wanted to let you guys know that conference going on today. Now, interesting, which happens in a lot of conferences. All the cryptocurrencies have bounced. Well, I shouldn't say all of them. I take that back. The ones that I track all bounced off of this conference today. Pretty interesting. So let me get into the cryptos first. I also want to talk about this week about the VIX. The VIX gave me a buy signal again on Monday. I attempted to actually send out a picture of it on IG, and I could not, for some reason, get the picture I couldn't get the picture to work. I don't know what was going on with my phone, so I couldn't get it to work, so I didn't send it out. But you guys had heard me say that in the previous week, keep an eye on the VIX. Keep an eye on the VIX. It's probably going to give a signal soon. I felt that was coming. We got the signal, and it's on the sell-off Monday, got the signal. And I'll tell you what I did on that in a second. So let me do a couple things. I'm going to jump into the VIX, but let's do this first. Let's jump into the cryptocurrencies. Let me jump into the cryptos. And then, what's up, Lance? After I jump into the cryptos and then talk about the cryptos, the futures market, and then I'll answer any questions and talk. Well, I want to talk about the VIX. So let's do this first. The cryptos. Bitcoin. All right. Real simple. Bitcoin bounced off the $30,000 support level. I told you it was at $30,000. It bounced off that. Now it's in the trending range between $30,000 and $33,000. It breaks the $33,000 resistance. Your next stop would be $36,000. Now, again, as I had just mentioned, all the cryptocurrencies are bouncing off of this conference. And every time this again, I've been around for a long time. I've earned these gray hairs. Every time I've seen an industry, a stock, move off of news and nothing else, that's when the speculation comes in. So let me explain what's going on. If this was a stock, a company, and the cryptocurrency I'm talking about, Bitcoin, Ethereum, Doge, all the rest of them, if they were stocks, I've been giving you the technical support, technical breakouts, and this and that, and I told you the stock sold off and they bounced off of support recently. Usually when a stock bounces off of support, what it means is that the market is seeing value there. At that price level, as it comes down, they're seeing value, so they want to buy it. Sometimes it might have to come down a lot before they see value. And at some point, if the stock price drops enough, the stock itself, the company itself, has now become a value play. A value play means the asset's worth $100 and you can buy it for $70, $60. All right, that's a value play. Now, the problem that I have with the cryptos is they've all come off. They're all at near-term lows. They're all at, basically, when they hit that support level, if they broke that, they were going to go to levels prior to the major run we've seen in the cryptocurrencies over the last 12 months. So with that said, all I'm saying to you now is I'm not sure if Bitcoin is undervalued or overvalued because no one knows what the value is. All right, repeat that. On these cryptocurrencies, no one knows what the value is. They can tell you what they think it's worth. They can tell you what the business does and how the applications are, but no one can put a value on these. And that's the reason why they're moving off of news. They're moving off of conferences. They're moving off of news releases. Be careful with these kind of stocks, or these trades. So with all that said, let me continue. So Ethereum bounced off of support at 1700. You've got near-term resistance at 2000. All right, all of them are bouncing. Dogecoin bounced off at 17 cents. That's where support was. I had told you if it broke 17 cents, the next stop was 10 cents. So it bounced off that 17 cents, and now it's in the trading range between 17 cents and 23 cents. Ripple bounced off support at 50 cents. It bounced off it. So now it's in that trading range. Your next resistance level is 60 cents. If it breaks through 60 cents, you got resistance at 70 cents. All right, so that's what's going on with Ripple. Cardona, ADA, bounced off support at $1.02. You got resistance at $1.16, and you have more resistance at $1.26. I did Doge, I did Ethereum. I believe I did all of them. All right. So with this said, let me say it again. The 5 cryptocurrencies I just named all bounced off of support today, based upon the meeting that's down in, I'm not sure where it's at. So I think it's in Florida, but bounced off that meeting. So all I'm saying to you guys is they're running off of news. There's an old rumor on Wall Street, buy on rumor, sell on the news. All right. I don't know what happens with the cryptos from here. I know there's a bunch of resistance levels. I would not be surprised to see them things trade down. Understand this conference that they held, all it did was talk about the applications of cryptocurrency, how they work. I don't know if they came up with any valuations. I saw Elon Musk talking about, some of the things. It was pretty interesting what I heard so far. But anyway, with all that said, remember when Elon Musk was on Saturday Night Live, how Doge ran up ahead of him being on Saturday Night Live. Then when he got on Saturday Night Live, it was basically, what do you guys call it, a nothing burger or something like that? But basically it was a non-event, and Bitcoin sold off. So again, if you're buying this rally, be quick. That's the cryptos. All right, enough of that. Let me move on. I got some exciting stuff to talk about. All right, on the futures market, gold. I told you to go long gold. Gold just broke below its 10-day moving average. Close out your position if you haven't already. If you win gold, take your profits. Sugar, same thing. If you went short sugar, it just moved above its 10-day moving average. Close out your position. Same thing with the yen. The yen, close out your position, take your profits. It just broke its 10-day moving average. All the cryptocurrencies that we have been talking, all the commodities we've been talking about have pretty much worked, but they all have closed out. So right now I don't have any short or long positions in the commodities market. All right, that's that. Now, let me get into, before I take any questions and all that, let me get into a couple of things. I had told you in the past, and I'm pulling up right now as I speak, I had told you in the past, and I had gone through this, and that is my VIX strategy. VIX. So in fact, let me type that up, make sure everyone's on the same page. VIX. VIX strategy. All right. Hey, what's going on, So let me type up VIX. Now, I already know this, but I'm putting it, and you have the picture. See if I can even find the picture. I sent it to you guys. There it is. Of course, you only can see a part of it, but it's there. So let me close that. You can barely see it. So let me close it out. All right, so what I did was, again, just going through it briefly, the VIX Volatility Index. For me, it's a contrarian indicator. I use it to let me know when the market's oversold or overbought. The main way I use it is to find out when the market's oversold. All right, what I do is I take the VIX, I track the VIX with a Bollinger Band set for 2 standard deviations and a 20-day moving average. And what I'm looking for is that extreme move into the tail. When the VIX runs up, contrarian, when the VIX goes up, it's because the market's going down. When the VIX goes down, the market's going up. So on Monday, when we had that sell-off, 700 points, at one point it was 900 points. We had that sell-off and closed up down 700 points. The VIX penetrated the upper Bollinger Band set for 2 standard deviations, which means we were in the negative tail. All right, that encompasses. Let me get my numbers right. That puts you at a negative 2.5% in that tail. Anyone knows that when you get to a tail, in most cases, you look for a reversion back to the mean. I'm not trying to get into too much math. I'm just telling you common sense. When something moves too far away from the average, over time, it's going to move back to the average. Even if the average is skewed a little bit, it's still going to move back towards that average. That's what it means to be in extreme ranges. So when the VIX penetrated the upper Bollinger Band, which it penetrated and closed significantly higher than that. Right now, in fact, I can tell you on that day, the upper Bollinger Band was set at a 20.41, and the VIX closed at 22.49. So it penetrated. At the end of that day, I did not, and I told you typically when I get this kind of signal, I go along the Qs, the NASDAQ Qs. So what happened was, and again, like you guys should be doing, I'm always refining and looking at my models. So I jumped into the marketplace and started looking, and one of the things I had noticed was, and I'm talking about the day after, the second day, because I went long the market the second day. I normally go long the first day, but I went long the second day, and I'll tell you why. We diverged, the NASDAQ and the S&P and the Dow have been divergent and then coming back and divergent. When I looked on Monday, when the market started to run up, I noticed that the Qs were barely outperforming, they weren't outperforming NASDAQ, and they weren't outperforming the S&P when the market started to run. So then I went back and started doing some analysis and started looking. At the same time, let me tell you this. So then I found NASDAQ. Now, I don't know if you guys know this. NASDAQ, where you trade, NASDAQ stock, over-the-counter market. NASDAQ is a public traded company. I ran a correlation between NASDAQ and the S&P. And over the last 6-7 months, NASDAQ's been outperforming the S&P, NASDAQ's been outperforming the Qs. So with that said, I was like, okay. So then I went and looked at NASDAQ, the stock, and also realized that NASDAQ was due to report earnings. So make a long story short, instead of buying the market, I brought NASDAQ. I brought the NASDAQ market. I went long NASDAQ, did extremely well. Stock ran a little bit. And let me put up the symbol for you guys. NASDAQ, NDAQ. So I went long NASDAQ, looking for the move off of the fact that the market was oversold, looking for that bounce. And I got the bounce. And, I think the market's going to hold. I think the market's fine. I can give you a number of reasons why the market's fine. A couple of reasons why the market's fine is the amount of cash on the sidelines. There's a ton of cash sitting on the sidelines. First thing. Second thing is, there's a ton of Americans, millions of Americans now that are getting a check from the government to help them raise their kids. All right, that's bullish for the economy. That's bullish for the economy. All right, so I cannot see us having what we call a major market pullback. Now we might have a correction, which is what we had on Monday. We might have another correction, and I would look at these corrections as a chance to buy, get long positions. Next time you see the market down, 200-300 points or more, 500 points, pull up the VIX on your chart, pull up the Bollinger Bands on it, and if it penetrates the upper Bollinger Band, go long something that's going to move with the market or even move faster than the market. The hard part's going to be, I know it's hard, market's down 700 points and Milligan's telling you, 900 points, now's the time to be buying, all right? I'm just telling you from experience. Now, even in a bear market, when the VIX penetrates the upper Bollinger Band, you're going to get a bounce. In a bear market, when the market's going down, the VIX will give you this indication the bounce might only last a day or 2 days or 3 days. In a bull market, this kind of bounce can last for several weeks. All right? So, in fact, real quick, I know back in May we went long, and I got stopped out because it had a little bounce pullback. But basically from May 12th, to June 18th, 19th, the market ran. The Qs, if I remember correctly, the Qs I went long at 517. Those same Qs now, even with that pullback from 517, those same Qs now are trading up at 361 right now. So that's how I use these. That's how I trade these. That's how I use the VIX to help me figure out what's going on with the marketplace. All right. So again, I don't see any reason why we should be shy. I don't see any reason why you should be not buying. So again, Apple's another one. I told you guys I brought some Apple, some more Apple. I brought some more. I brought some NASDAQ. I brought some more Visa. Also, I want to mention right now, before I forget, and after I go through these stocks, I'll be ready to talk about. A couple things. All right. Krispy Kreme donut broke that $17 price. All right, Krispy Kreme donut. I'm pulling up the chart right now. Krispy Kreme donut broke that $17 number, and right now it's trading at close at $16.28. I guess the only thing I can tell you is that Krispy Kreme donuts, the symbol's donut. That's why I keep saying donut. Symbol is DNUT. They have options on this. So I just was looking at the options. All right. So the options, I was looking at options on this, and they're not expensive whatsoever. They're kind of cheap. $1, $2. So I don't know where we stop, but I think there's more downside pressure to this than upside. All right. Path of least resistance is to the downside. I also wanted to bring up, I'm going to type in the symbols. 3 other stocks that appear to me to be something that you might want to watch for shorts. All right. MCG, FX, LV, and STVN. All 3 of these, I forgot to put the $sign in front. You guys are teaching me. I'm a little slow at times. All 3 of these are actually at or near a place where you can get short. I mean, they're just trading. The MCG was priced at 14. I'm pulling up the symbol now, so bear with me a second. MCG priced at 14. And right now the stock, we'll put it this way. Stock was priced at 14. On the first day of trading, it opened up at $13.55. Right now, the stock is at $10.34. I know I'm redundant, but again, I know you guys have heard me say this, and I'll keep saying this. When an IPO stock can't hold its IPO price, it's a short. As soon as you can short it, get short. There's nothing good going to happen with it. All right. Use the IPO price as your buy loss. In other words, if you're short, where you want to cover at. So this stock was priced at 14. Now it's down to $10. I have no problem getting short down here. I was priced at 14. The only time I would get worried with this thing if it broke above 14. All right. With donuts, the number 17. If donut breaks above 17, close out your short position near term. But it's having problems. The FXLV, which is F45. It was priced at 16. Originally, it was supposed to be priced. The price range was $15 to $17. They priced it at 16. The third day of trading, it broke. Its third day of trading, it broke 16. Right now, the stock is at $14.24. Again, short, especially in a bad market, off a market that's going down. All right, and last but not least, STVN. Yeah, I got the symbol there. STVN was priced at 21. International stock ADR. First day of trading, the stock opened up at $16.65 off a $21 pricing. All right. The stock right now today hit a high of $19. Hit a high of $20.40, priced at 21. They're trying to push this thing back up. I would have no problem getting short. I'm going to look at this one. Getting short and using the $21, above $21 is my stop. my buy limit to close out my short position. But yeah, it does not look pretty. They're trying to run this thing back up. Again, I not to be redundant, when these IPOs come, they do a road show. And that reminds me, I'm going to post this. Robinhood's going public. I knew I forgot something. Robinhood's going public. Robinhood sent out a text message, an email to anyone that has a Robinhood account saying that they're going to have a road show where you can actually listen in. You can, I guess, zoom in, listen in, but you can actually listen into the road show. I highly recommend, if you've never listened or seen a road show, I highly recommend you log in and just listen. You won't be able to ask questions, but you'll be able to listen. You'll be able to hear the questions institutional investors are asking. You'll be able to hear all the points. You'll be able to hear the CEO talk about what they think is going to happen going forward, what to expect. They're great to listen to get a great understanding about a company and how they work. Now understand, this roadshow, and I'll find the email and post it. This roadshow is every IPO, every company that does an IPO does a roadshow. And what they do is they bring in institutional investors, mutual funds, hedge funds, the banks, the insurance companies. They bring them in and they pitch them the company. All right, they tell them all the things, reasons why they want to own it, what's going on, what's happening. These analysts also ask questions. The analysts then will take that data and information that they get off this roadshow, and they'll come back and they'll actually determine what they think the stock should be trading for, what they think it's worth, what they're willing to pay for it. Then these institutional investors will contact the investment banker who's handling the deal for Robinhood and tell them how many shares they want to buy and at what price. They are the price setters. If you've never seen or heard this, it's well worth it, especially if you plan on investing in IPOs at some point in the future. You want to hear what's going on in the roadshow. All right. I've attended a number of these over the years. They're really good. And as you guys know, I'm also a big proponent, which I've told you if that company you're dealing with, even if you don't want to buy that company, if it's in the industry that you're interested in, get the prospectus and read through it. There's a wealth of information in there that you'll never see in print in one place ever again, especially on the company. All right. So that's what I highly recommend. Again, I'm writing myself a note. I'm at that point in my life where I write myself notes. Robinhood Roadshow. I will post it sometime later today, this evening. I will get that posted so you guys can actually log in and go to it. All right, with that said, I think I've covered everything I wrote notes for. So as you know, I covered everything I wrote notes for. If there's any questions or anything you want me to look at, now's the time to ask. And if not, I guess I do have another topic that I can bring up, but I'll wait to see if there's any questions. I don't see any questions. No one's typing any stocks. So I guess I will move on. All right. I tried to post this picture, but you can't see it. Well, let me see. Let me see. All right. I guess you guys can see it. When I tried to actually post it, it didn't show up, but there it is. Last week, Lance, I think Lance is on the call. Lance asked me what my buying, when do I determine when I'm gonna get out of a stock? And so what I did was, I'm always writing. I'm always putting stuff together. I wrote this up. I've never published this. It was in a book I was working on, but I wrote it up. So anyway, long story short, here's my sell strategy. All right. So you see, entry point. When I enter a stock, typically my stop is my stop loss I put in when I buy a stock at 100, I put a stop loss in 10% below what I paid for it. All right. Never more than 10%, but usually 10%. I might actually be a little narrower than that, but 10% is my number. If the stock goes against me and goes down and hit, down 10%, I get stopped out. I'm gone. I'm done. All right. If the stock I'm long and it goes up 20%, I'll adjust my stop to 5% above my purchase price. So again, I went long the stock at 100. It's now at 120. Now understand, between 100 and 120, my stop loss is still sitting at 10% below what I paid for it. As it moves up maybe 5 or 10%, 15%, I might adjust that stop to break even. What I mean by adjust the stop to break even, adjust that stop to move it to what I paid for it, 100. So that way I don't lose any money on the trade. If the stock goes up by more than 20%, I'm going to move that stop loss to a 5% above my purchase price. If the stock moves up by up more than 20%, but 20 to 50%, I'll move that stop loss to 15% of off the high, 15% off the high. And if the stock's up more than 50%, I'll move my stop loss 20% off the high. What I'm going to do is, and what I'm trying to do is, I'm trying to give the stock, as I mentioned before, as far as I'm concerned, my biggest risk in the stock is when I initially take that first position. And the reason why when you initially take a position, I brought the stock at 100, it's my money. And if I sell that stock down 10%, I lost 10% on my money. If I sell the stock down 50%, I lost 50% on my money. Now, when the stock goes from 100 to 120, easy numbers, at that point, that 20% gain is, for those who go to Vegas, is house money. It's not mine until I realize, and I don't realize it until I sell it. So it's house money. So what I'll do is I'll move my stop up now, because the most important thing to me is my principal. How many times have you guys, you personally or people that you know, took their portfolio and ran the portfolio up, from 10,000 to 12,000 to 13,000, 15,000, only to give it all back? All right. My goal and my strategy is not to give back the money I've made. All right. And I'm not going to give back my principal. My principal is my inventory. I use my principal. I use my cash to make money. So I don't want to give that up. So I'm real stingy when it comes to my principal. I'll be more aggressive with house money. So when the stock starts to confirm itself, I'll start to adjust my stop losses. All right. Now, once the stock is up significantly, I'm playing with house money. Now, I know, and it's funny because I've had this discussion with some portfolio managers that will tell you that, and I'm going to give I can't remember the exact stock, but I'll give an example. Portfolio of 10 stocks. What's going on, Mr. Cornfield? Portfolio of 10 stocks. One stock in that portfolio doubled in value. All right. You'll hear portfolio managers tell you, because that one stock doubled in value, it's riskier than anything else in the portfolio because it's moved so well. And I scratch my head and I go, wait a minute. I just got done watching Milwaukee win the NBA championship. So you're telling me that if Giannis is playing really, really great, I should bench him now because he's riskier, because he can't keep playing great? I don't understand this analogy. So what I'm telling you is, as the stock starts to run in that portfolio, portfolio managers will tell you it's too risky and we got to reduce our weight in that stock, because if that stock comes back, we're going to lose some money. And I look at it just the opposite. That stock, that Giannis, carried the whole team. It's carrying the portfolio. Why would I reduce my superstar? In fact, if anything, as my superstar is playing great, I'm asking him, do you need anything else? What else do you need to keep playing the way you're playing? Whatever you're doing, don't change it. Whatever you're doing is working. So when that one stock in my portfolio, the other 9 aren't working, that one's working, I'm not going to reduce my position in that. If anything, I might find the worst of the 9 performing stocks that I left in the portfolio, sell that, move that cash into my best performer. All right. So with all that said, I know I'm telling you things that are different than what you've been taught or what you've seen or heard about portfolio management. Portfolio management is designed by mutual funds that market themselves and tell you why you should spread out and diversify. All right? I got a problem with that. I want you to think about that. If you're diversifying and every time your best performing stocks, your weight becomes more than what you expect in the portfolio. So when your weight becomes more than 5 or 10% of the portfolio, you're constantly selling it and moving it back to the weights. I'm looking at you going, that's the wrong move. You're reducing the times on your superstar. You're putting Giannis on the bench at a time when the rest of the team's not playing well. Giannis should not be on the bench. The ones that ain't playing well should be on the bench. All right? Let's reverse this, guys. My computer went to sleep. Now, I'm on my soapbox opera. I'm sorry. I don't mean to preach to you guys. But again, you're seeing what I'm talking about. That's what I'm talking about. That's what I would do. Now, when a stock is up over 100%, I don't even use a stop loss anymore. I don't look at it every day. I just look at the end of the day. Why am I doing that? Because I do not want to sell it now. I don't believe in selling winners. I don't believe in selling up stock. So when I got a winner, I'm not staring at that thing every day saying, oh my goodness, it's going up, it's going down. I look at that because I've got room now. My principal is fine. My principal's safe. All right. All right, let me get out of this. Enough of that. I know I got some questions up here. So let me see where my questions are. I'm just going back. Bear with me a second. I know I saw one here, Mr. Cornfield. Oh, there it is. Automobile industry is going more towards electrical vehicles. What is your opinion on Exxon, in particular fossil fuels in general? Twin, I've said this before and I'll say it again. Long term, the oil industry is a short. Long term. Now, that might be 5 or 10 years. It might be longer than that. So right now, you could trade fossil fuels, trade them. You can invest in them. But what I'm saying to you is, and just follow me, you have some major automobile manufacturers saying that by 2035, 2030, they plan on being all electric in terms of manufacturing their vehicles, not using gas-powered, building gas-powered engines anymore. If that's the case, now it's going to take time. There's millions and millions of cars on the road. All right, so that's what's driving demand. Don't get me wrong. There's huge demand for oil in other areas, chemicals, plastics, so forth. But we also know one of the major drivers also is energy in the automobile industry. All right, that's the reason why the auto industry fought the electric car for so long. Well, it's coming. It's here. So all I would say is you can trade these, but again, long term, it might take 30 years for this to work its way out through the wash. So that's what I mean by long term. It's going to have an impact. And I saw this the other day. I read somewhere the other day and I saw it, and I talked about this also. And I said, if your job is transporting, driving a truck to transport goods and services, you drive an Uber, taxi, anything like that for a living. I mentioned this a couple of months ago. Go start looking for a new industry, because the autonomous car and truck is going to replace you. All right. We're seeing it. We saw it already in the factories, where a number of these factories now have replaced factory workers with machines that do that work much faster, much more efficient, with no labor costs, quote unquote. Same thing's going to happen here. So again, I think you can trade the oil and gas industry. You can invest in it, but I would not be looking at this saying in 30 years, ExxonMobil is going to still be doing the same thing it's doing. It's going to have some problems, and they're going to have to figure it out. All right. Let's see. Mr. Cornfield's at work. All right. What's going on? NG1 trading at ATL. All right. Oh, you talking about natural gas? I'm assuming, Stephen, that you're talking about natural gas. Let me go into my futures market. I assume that's what you're talking about with NG, natural gas. Nope, can't be natural gas, because natural gas is not trading at all-time low. All right, so let me go back. What are you talking about, Steve? Let me see. NG. Resource company. Let me get rid of something. Hold on a second. Let me get rid of this. I don't need to see that. Okay, cool. And you tell me this is an all-time low? Well, if this is an all-time low, no. NG's all-time low looks like $2 maybe. Hold on a second. I'm going to... All-time low on this is actually 32 cents. but it's not trading well. I'm not sure what they do. I know their resources just by the name. I don't know what they do, but I would say to you that point of least resistance is to the downside. And looking at this was a head and shoulders. Head and shoulders chart. The neckline was at $7.90, 88 cents. Excuse me, $7.90, $8 around there. We just broke below that neckline over the last 2 or 3 days. So, bear with me a second, zoom in. Actually, it's been a little longer than that. I'm making the chart a little bigger so I can see more. So over the last 3 days, it broke the neckline. That's bearish. Oh, you were talking about natural gas. So you were talking about natural gas. Natural gas isn't at the all-time low. I'm going to, again, back to futures, natural gas. No, natural gas is actually running. In fact, bear with me a second. You asked me about natural gas. Bear with me a second. On my commitment to trade report, it's funny, I was looking at this. On my commitment to trade report, natural gas is not there. But the one that's really interesting right now is gasoline is actually near. Gasoline is actually trying to give me a buy signal. Natural gas, I'm not sure what to do with natural gas. It just broke out of a trading range. And just looking at the chart, broke out of a trading range. Yeah. All right, let me see. Hold on a second. I'm trying to, trying natural gas. How about your rule on position concentration at the time of entry? It's interesting. My position size, no problem, twin. My position size is based upon risk. Really is. Position size is based upon risk. So let me explain. If I think, if I have a stock I'm long and I think my stop is going to be $1. So in other words, if I brought the stock at 18, if it goes to 17, I'm out, that's $1. All right. And the most I'm willing to lose on this trade is $1,000. Then I'll buy 1,000 shares of the stock if my pocket permits. On 1,000 shares with a stop at $1, if I'm wrong, I lose $1,000. I'm out the door. All right. My position size has always been determined by how much money I'll lose if I'm wrong, not how much money I'll make if I'm right. All right. Let me say that again. My position size is basically led by how much I'll lose if I'm wrong, as opposed to how much I'll make if I'm right. Whenever you're right, you never own enough stock. All right. You just never own enough. You own 1,000 shares, it's not enough. If the stock's going up, you own 10,000. Whatever you own, it's not enough when the stock's working in your advantage. When the stock's going against you, no matter how much you don't own or how much you own, whatever you own is too much. So when I look at a stock, for argument's sake, I'm looking at this natural gas. I got support right here on natural gas at $3.77. All right, so if I put a stop in, my stop would be just below that $3.77. Now that's basically about 20 cents below where the stock is now. So now 20 cents on this contract, I'm not gonna go through the numbers, but let's say it's a stock. All right, if it's gonna go down 20 cents on a $3 stock, $4 stock, and I'm looking at 20 cents, how much am I willing to lose? Let's say it's 20 cents, I'm willing to lose $5. I'll take the $5 divided by 20 cents. So 25 shares. So I'll buy 25 shares. All right. That's how I figure out my share concentration, Lance. I determine how much stock I'm going to buy based upon how much money I'll lose if I'm wrong. My biggest fear is not having money. My biggest fear is not having any money in my pocket or in my account to actually make any investments. My biggest fear is giving back the profit I made. Have there been times when I've got stopped out of stock only to see the stock turn and go back higher? Sure. I've seen it happen more times than get stopped out of stock and see it totally break down. But all I'm going to tell you is that at one time your stock totally breaks down that you didn't tell because you said, oh, it's going to bounce, buy the dips. That kills when I hear you guys say buy the dips. If you're a long-term investor and you own, a couple hundred, 1,000 shares, you want to add to your position on the dip, 1 or 2 shares or a small percentage, feel free. But if you're aggressively trading and you got stopped out of a stock and now you're going back in with a loose position because you want to buy the dip to try and make back the money you lost, you're making an amateur mistake. All right. And the reason being, all it takes is that one time that dip does not come back and you're going to get hammered. All right. Stephen, you're right. It is at all-time high. Stephen and I finally got together. He was asking me about the natural gas, and I kept saying all-time low to all-time highs. And, hey, it happens. Happens to the best of us. So I'm just looking through again. All right, so I don't have any other stock quotes. I will pull up a couple things that have looked interesting to me. Bear with me a second. As you guys know, Netflix reported earnings. They did not meet what was expected of them. The stock has sold off. Netflix, of the FANG stocks, is not trading well at all. And so what was the number? Let's see. Estimate was for $3.18. They reported $2.97. Not doing well. Your NVIDIA, when the sell-off came, took some profit. I would say this to you. The stock, interesting. The stock had a major run. And we talked about it last week. I told you again, I said, I'm looking at the all-time high. I said a 50% retracement off this would be natural. It retraced 50%. Then when it started to run back up again, it could not get back to the old high. So we talked about it. I told you it's going to come back and fill that gap. It came back and filled that gap off that Fibonacci retracement, came back and filled that gap, but it did not attack the old high, which was at 208. And so then it broke down with everything else in the marketplace. It broke down. Now it's trying to fight its way back. For those who don't know, there's a chip shortage going out there. This chip shortage is actually hurting the car industry, hurting a lot of industries. And as you guys know, NVIDIA, thanks to my students, I know this, it's the #1 chip manufacturer for the gamers. So it's held up. It's doing extremely well. It also announced a 2-for-1 stock split. I don't know when the stock split is. Well, it's not more than 2. It's more than 2 to 1. I'm not sure when the split is, but there's a stock split coming. All right. How's this play into energy? Stephen, I'm not a what we call energy expert. In other words, I'm not sure why natural gas would run when oil and gas is not running. But the one thing I will say is that I'm not sure. I really don't. I can just look at the chart and tell you I'm not sure. The other thing which is interesting on the commitment to trade report, hold on a second, let me just, commitment to trade report on natural gas. Bear with me a second, come on. The commitment to trade report on natural gas, there it is. Interesting. So the commitment to trade on natural gas, they've actually been getting net long. All right, the net long position's been increasing. Now, we're not at an all-time high on net longs or even close to it. But on natural gas, we are getting, it's kind of like we're in a neutral territory right now. It's not giving me a buy or sell. The one thing I can say, though, is that over the last several weeks, natural gas, I'm just looking for it again. Over the last several weeks, natural gas has seen more and more buying from the commercials. So in other words, the companies that actually have to deal in natural gas, either supply it or buy it, they've actually been getting net long, and they've been increasing net long position for the past several weeks. What that means to me, though, is, and I'm going back to the chart, bear with me a second. What that means to me on natural gas is that, and this is interesting, natural gas has run over the last 3 weeks, and during this time when it's actually running, the commercials are actually getting net long. Now, one of the most bullish things I've ever seen, thank you for the information on the NVIDIA stock split, 4-for-1. It already happened on July 20th. All right. That's probably where the sell-off came to. The market and that sell-off came off. All right, let me go back. On natural gas, there's nothing more bullish than a commodity to be at or near its all-time high and the commercials increasing their net long position. Now, the commercials have to buy natural gas. They're forward-looking. So if the commercials are getting long natural gas at its all-time high, what it's telling you is they think the price goes higher. All right. Normally what you'll see is when the price is going higher, you'll see the commercials actually get net short. And the reason why they're getting net short is because they're selling because they expect the price to come down. So this is actually going to be very interesting to watch over the next couple of weeks, Stephen. Again, the commercials are getting net long. And for those, and it's funny because I've traded this in the past. Natural gas traded between $3.60, $3.59, and $3.82 for almost, what is that, about 3 weeks. And then it just broke out yesterday. Yesterday it broke out. And for those who went into charting, right now today it has a spinning top. As you know, spinning tops are neither bullish or bearish, but they typically mean that you're running out of gas. But the one thing I'll say to you is that this thing just broke out. So I would keep an eye on it and see what the commercials are doing. All right. All right, Mr. Cornfield, I got yours. So again, NVIDIA did split. It split 4 for 1. I'm going to go back real quick and look at that chart. And the reason why I look at that chart and see what I would do with it after the split. So did it on July 20th, July 20th. Yep. So there it is. And then we ran from there. All right, bear with me a second. Let me just look at this chart. I would say right now, you're sitting at near-term resistance right at 194 where it closed. If you can push through this 194, you should actually attack the new all-time high, which adjusted for splits is 208. Yep. So I think if you push through the 194 where it did today, you should attack the 208. I don't see any reason why you wouldn't buy it. Believe it or not, I would use this dip to add to my position, and I actually think it's probably going to be a good buy right here. But I would, patience. But I don't see any reason why you shouldn't see follow through. All right, Mr. Cornfield, I see you put a couple things up here. I'll take a look at them real quick before I sign off. DG, Dollar General. I haven't looked at that stock in years. It's been years. Yeah, I thought so. I had one of my students say one of the most insulting things you can say about Dollar General. He called Dollar General the poor people's stock. He said, this is for poor people. He said, so Dollar General is for poor people that want to invest. He said, only poor people shop at Dollar General. Really interesting. I didn't lose my cool, but basically what a racist comment that was. It was a real racist comment. All right, Dollar General. Come on, Mike. Dollar General has a lot of volatility in it, had a lot of volatility, trading really well. You're at all-time highs. It did run to all-time highs, but it's not being confirmed by volume. Yeah. I'm just looking at it. Stock's at all-time highs. It's been up here before. A lot of volatility in this range. So it's been up here before. And you can see going back to 2020, it's traded between 205 and 224. And we're back in it. So it kind of hit this 1, 2, 3, 4, 5 times in the last 12 months it's been up here. It finally broke through. Let's see if it has some follow through. If it doesn't follow through on this and it breaks back down to the old trading range, the first stop would be 220, next stop would be 210. Dollar General. UPWK. Upwork. Yeah, I thought so. I remember the stock, the chart. Upwork. What can I tell you on Upwork? Symbols UPWK. So he's asking me about Upwork, UPWK. Let's see. I'm sorry, I'm looking at something else. UPWK. Right now at 5 to 55, you're at the bottom of a near-term trading range. That near-term trading range, it looks like it's between 55 and 60, 61. It has broke through there, but here and there. Again, you have earnings coming out on the 29th, it looks like. Yeah. You have earnings coming out. They expected a loss of 4 cents. So again, I'm not sure what the company does. I remember this IPO. I don't remember what it does. A lot of volatility in here. So you can see where the stock between 35 and 60. So it went as low as 35 back on May 12th. And then by July 12th, it hit 63 and it pulled back from there. A lot of volatility. I know I said that a couple of times. Yeah, if anything, I would trade this after earnings. I would wait for earnings to come out and see how it handles earnings. It misses the number, it's going to sell off really big. If it makes the number or beats the number, it should give you a nice run. T-Mobile. T-Mobile. T-Mobile's in a trading range right now. I'm looking at the chart. Yeah. It's sitting right at support at 143, 144, and your resistance is 155. Real simple. If it breaks the 144, next stop is probably around 140, 139, 140. If it breaks through and resistance at 150, which is all-time high, and you might get that because, again, earnings are due out on this. And it looks like in the past, cancel. In the past, the stock has run, well, that time it didn't run off earnings, but in the past, they've been beating earnings. They've been beating expectations. So again, another stock trading well, but I'd watch it ahead of earnings. Yeah. And then DFS, Discovery Financial Service, Discovery Card. I'm assuming this is at an all-time high because I'm pretty sure it is, but I'm just double checking. If I remember correctly, Discovery Card is the third largest credit card company in the U.S. If I remember correctly, I'm pretty good at that. I do remember that. Yeah, DFS. All right, so what do you have here? You got a trading range between 112 roughly and 127, right where we're at. You're near all-time high. Earnings came out. Earnings were due out on the 21st today. Estimate was for $4. It came in at $5.55, so they beat the number. I'm not sure what they're doing in the aftermarket trading. But again, your resistance is at that all-time high, which is around that 127 number, $127. You get through that 127 number, you should run. A lot has to do with earnings. Bear with me a second. I'm going to go to Yahoo Finance. Yeah, I said it, Yahoo Finance. I want to see the aftermarket trading on this. Bear with me a second. Let me check my time. All right, I got 5 minutes so I can keep going. DFS. Nope, there's no aftermarket trading. So when did they report the number? It looked like it was reported today. Maybe I'm wrong on that. Yep, but that's it. All right, let me see what else we have here. I got that. Let's see. NVIDIA, we got that. I'm just reading through. Welcome, guys. Welcome, East the Beast. East the Beast, 1, 2, 3. East is, for those who don't know, that's my godson. really smart, bright young man. And I'm glad he wants to learn how to make money in the stock market. My godson. Welcome, East. All right, I don't see any other charts anyone's asking me about. The one thing I'll say is, hold on a second, I'm pulling up something else. I was just looking at Visa and MasterCard based upon what was happening with Discovery Card. Yep. So I was just looking at that. All right, I don't see anything else. I don't see any other question. I'm just going to go through and look real quick again. Ollie, I haven't looked at that stock in. Now, is this one of my former students who put up Ollie, O-L-L-I? I don't recognize the. I don't recognize. The reason why I asked is one of my students was in love with Ollie, and had written a buy report on it. And yeah, interesting. So that's the reason why I asked. One of my students liked the company, wrote a buy report on it. I was wondering if this is him. All right, so for Ollie, 1, 2, 3, 4 times in this year, the stock has got to this $96 range and failed. All right, so you're trying to attack it again. Triple top, wow. So I would just let you know. So it's the third time it's gotten up here, and third time. Let's see if it can get through. If it does get through this 96 number, you should be able to attack the $100 number, and then you have some traffic between 100 and 110. Yeah, if you're already long, I'd weather out the storm and see if we can get through 96. Like I said, that 97, 98, 96 number, if you can get through there and attack. You've got near-term support. Old support was at $90. And if you break that near-term support, your next support's at $84. So that's what I would look at with that. I wouldn't be too crazy about it. Ah, so this is you. Yes, LOL. Okay. I still like Ollie. I'm sorry. If I remember correctly, I wasn't too keen on Ollie when you brought it up in class, if I remember correctly. And just looking at the chart, I'd probably say, yeah, I wasn't too keen on it. That's probably why you said I still love it. Shopify. All right. Shopify. Let me check my time. Oh, I got to hop in a minute. Shopify. Near term. Support at 1400, 1425. Resistance to old high. You're in a trading range. If the number comes out, which is due out in a week, if they can come out and beat the number and estimate, you should see a run in this on Shopify. You're back up here at the all-time highs. So, I like when stocks trade well ahead of the number. I always like that. All right, I got to go. I'm sorry. I got to go. If I don't go now, I won't be able to save this recording. All right, love you guys. Appreciate you, and I'll see you next Wednesday. Professor Milligan out.